Hello everyone and welcome to today's course, which is going to be teaching you the strategy that we use here at Self-Made Academy. So what the strategy basically is I'm going to be teaching you a strategy that what I've been using and it has been working for me for quite some time in the Forex markets. And it's a strategy that's not just for doing small count growth and doing the hedge fund style or consistent growth, but could also be used for account flipping. In fact, I've tested on both account flipping and slow growth, and it works just as good on the strategy. It's just about how you trade it, and I'm going to teach you about both those ways today. So for this strategy, obviously I'm going to start off with a completely blank chart, as you can see here. I'm going to be going on my favorite pair, which is GBP-JPY. And I'm also going to show you about the only settings that really I use that are different. So the main part of my strategy that I teach people is the importance of using RSI and Stochastic Oscillator, okay? So as you can see here on my settings, the RSI is set to big, 70-30 is the price line, and basically its inputs is the basic 14 closed source, okay? And that is signified by this thick black line down here. And then next is you see the Stochastic Oscillator. Same thing, I have it set for 80-20 as the bands. So you can see on the page how they're almost identical. RSI and Stochastic, they're almost perfect together. That's how I like it, okay? Inputs for them, I do 8, 3, and 3, okay? So once you get that set up and have it in, you will then have this attached to your screen, okay? And I'm going to show you a little bit of what I use them for. Very simple sense is I use them for divergence and showing highs and lows of where the market is. All of that is important, okay? I'm also going to show you a little cheat sheet for beginners, what you can do to kind of help with knowing where the market's going to be going from now on. Okay, but first of all, we're going to start with the blank charts. We're not going to worry about the indicators just yet, okay? So don't really worry about them. We're going to take them off just so that we can teach you what we need to see beforehand. So my strategy is more of an intraday strategy, as many people know, which means I'll usually hold trades open for, realistically, I like to only do a couple hours, maybe a day max. You could hold them longer, but of course you're going to be expecting retraces, so depending on how good your entry is. I like to have tight stop losses. I like to make, quick 1%, 10%, 20%, depending what I'm trading per trade, and making sure I'm risking properly, not a large amount of risk, and I can get out so I can enjoy my day and not worry about drawbacks. Because as one thing that we've always been teaching is the market's always move in waves, which basically means, once you go down and get a big profit, you're going to be expecting to lose half that profit with some type of retrace before it continues going in the direction again, which for most people, if you do intraday trading, you could exit and then re-enter, or so on and so forth, depending how you like to trade. Okay, so the main thing that I actually trade on is a 15-minute chart. It is the most common thing that I trade on, but before I do anything, I always start on the 4-minute chart, because you need to look at some of the major supply and demand zones, support and resistance, as some like to call it. Basically the different areas that you still need to keep track of that are important. So here, what I'm going to do is I'm first going to draw up for you all of the things that we would first see on this chart. So I'm going to just grab the rectangle. So first, of course, main thing we saw is we can see these major zones here and down here of where we can see things going, right? Okay. So next thing is we're going to be looking at the waves of it, okay? So we have our support and resistance, supply and demand zone. So I'm not expecting the market to go anywhere between here or here. So when it was up here, people that saw we already made profit on this trade, but when it was up here, what got us to want to trade aside from supply and demand, support, resistance? Because as you can see, they always do get broken eventually, right? You can see over here. And how do we prevent that? Well, first of all, we're not just trading on the 4-hour chart. okay? But that's the first thing we like to see, okay, is drawing where our boundaries are. Now, if we go in as well, we can already go in and see right here that it's at the basic peak. We've had what could be basically 3 waves, very abnormal waves. But we had one large one up here, a second major large one. Let me just draw this for you. Okay. So we started here with the wave. Okay. And did its push up. But the biggest thing that got me excited and want to enter this trade is when you pull up our indicators with all the teachings that I've taught you in the basic course, is we use the divergence and where the stochastic is, basically if it's high or low, to determine our trade. So if we zoom in here on the 4-hour, you can see 2 things that I really like to see. Not only are we getting up to that zone, right? We were getting up to that zone. How did I enter right at that peak right there? Almost no drawdown. Well, first of all, look, we have a zone. So we know we want to wait to that zone to get into for our main trade, right? Next, we have divergence. People always ask me, what is divergence? Very simply put, the market here is going upwards, as we can see, right? Creating higher lows. The RSI, so the big black line, is going down. Even with the stochastic, you can see that and the stochastic are doing the same, right? If you want me to hide the stochastic, the RSI here, you can see the stochastic and RSI, right? Both going down divergent together. So what that is see the market's moving up, our indicators are moving down. That is what we call the divergence. That basically showing me, Daniel, this is getting into a very good time to enter the market. Now, one of my favorite things I like to see is I look for, before entering any trade, is look for the third touch on my RSI. So as you can see, the RSI goes down, up, touches here, down, up, and touches again, and we create a line between them that were basically peaks or fractals, as some people like to call it scientifically, fractals of what the market's doing. So from that was basically my point of saying, okay, that is where I'd want to enter for a nice intraday trade. I'm going to be getting the most profits in the least amount of time, which again, to me, trading is what it's all about. So I first had that, right? So we have that on the 4-hour showing. Very good, right? We have, again, a little secret for the new people is if you want to, put a horizontal ray, okay, a horizontal ray, right at the 50%, okay? Right at the 50%. I know I'm not exactly on 50, but just put it right there. What that will also help you with is notifying on when the market should be going in an uptrend or a downtrend. As long as it's above the 50%, it could still be in an uptrend. Once it breaks down, it's usually in a downtrend when it's below that, okay, on the 4-hour. So there's something just to show you. Now, if we go in, like I said, you could go in on the hourly if you want as well. It's another indicator, just as we can see the same thing basically happening here, right? It's just the hourly chart for watching is more of just a mix of the 4-hour and 15 is really what I look at it as. It kind of gives you a nice hybrid answer, which you should be getting. So I like to confirm all 3 for the best trades, 4-hour, hour, and 15. But looking here, you can see the same thing. We have our divergence. We have up here where our stochastic is, where it touches those areas that I told you to mark, the 80-20, 70-30. You can see both of our lines are just touching, connecting perfectly at the peak there, right? If you would have entered that sell pattern right there with our zone, look, literally no drawdown, instant execution down to it, okay? So that is really what I look for. It's not the 3 peaks. You can see there's not 3 peaks here on the 1-hour. It's more on the 4-hour, but we still have the divergence and it entering our zone, and the stochastics are a lot more viewable and usable at this time. So stochastics, again, when it's at the low is usually when there's a sell. When it's at the top, sorry, a buy. That's the top. It's usually when you want to sell, but you want to add on more to it, which is why we wait for the RSI, the divergence, all the good stuff in that point. You know, I love to also see one of the biggest things for my strategy. I love wicks. People that don't know me is I love wicks. In the simple sense, when I first started teaching myself Forex and understanding the markets, what I basically saw a wick says with a candlestick or a candlestick in general is I looked at it as a spaceship, okay? So basically what that meant is whatever way the wicks were pointing, right, was kind of like the fire or like, you know, the exhaust off of a rocket ship. So the more and more I see it, kind of if you're floating in space, right? You see up here, oh, it's shooting, then the momentum changes. Here, a bunch of pushes with wicks, momentum changes. Here, a bunch of wicks, momentum changes. The bigger the wick, obviously, the stronger the change will be. The more wicks, the better as well in one direction. If something's wicking consistently in a direction, it's showing that it will not be able to break that price. It just cannot seem to break it, right? So that's what we look for. So having the wicks added as well, that's just a little tip that I personally use as part of my strategy, is going for the wicks. Another one, of course, that people usually see me use is I love channels, right? So the same thing where you see this divergence we have, you can obviously see there was a nice channel going in there, right? So wherever the channel happens, wherever there's a channel, I only execute my trades in 3 positions, ever, only 3 positions. One is at the bottom of the channel, right? Like the bottom line where it's touching, like here, for instance. One is at the top, of course, or in the middle. Those are the places where you know you're going to be in a good spot to be entering. So look at this trade again that we entered now. If you look even further, we had the major 4-hour. We saw our supply and demand zones, right, where the big areas are to go for, right? But we also saw where to enter it was we had wicks, we had the middle of the channel, we had our stochastic and our RSI up there. We had, oh, so much, right? It was just basically perfect for us. We had an M if you want to count over here, right? You could count this over here and this, those 2 matching lines right there. So that would have been an M as well, or a supply and demand zone or support resistance as you want to call it. So all of that together is basically symbolizing a beautiful, beautiful entry. Now, what I want to lastly do is go on to the 15-minute chart for you and show the same thing, okay? So the 15-minute chart, right before we entered, it's again a little bit more short-termed if you want to call it that, where you use it, but the same technique applies. Like I was saying, the same technique applies where right here you could see market going up. Let me just draw this again for you. Okay, so from here, market going up, stochastics going down, right? Definitely going down quite strong at that specific zone as well. So when you see all that alignment together, that is a good sign, right? Why didn't we do it here? Why was it such a short-lived sell? Well, look here, you didn't see the divergence as we did here. That's why it was such a powerful push, okay? So that was basically the symbolization that we had for it coming out on the 15 minutes. So you can see how it's a major help to use those 2 indicators on top of your strategy, because every single channel, it's good to bounce off channels and trade off them. You want to use that as your basis, but number one, every single channel gets broken eventually, right? So we want to know how to look for it, like we just did here, and we knew, you could have exited right here if you wanted to, and that would have been an excellent profit risk reward, right? No matter what it was, probably 4-to-1, or you could have held it and expect, because we saw the 4-hour, right? And we saw on the 4-hour it was still divergent. You could have held and known this is probably going to be that push to break this channel. Okay. Now let's look at another example, okay? Let's look at another example right here. Major divergence, or the RSI, I should say, pushing down a lot compared to the actual market. You could call that divergence because they are moving a little bit different, but not the same as what I really like to look for. Let's see if we can find another example for you here. Well, here's a perfect example right here, right? Moving upwards, as you can see, right? But coming down here, what is it doing? Going down, right? So it's going down, this going up. We have our stochastic. Where is our stochastic up here? Super high, right? We're at the top of the channel, which you wouldn't have known it's a channel at that time, but you could have called an M and just gone off of it before that, and then when it would have built the channel, then you would know at the same time, hey, look at here. Same thing over here, right? Within our channel that we drew. We have this going upwards, right? But what is our RSI doing? Downwards, our stochastic going up, right? So with that 4-hour showing us, hey, these are going to be some price action areas which are worth to enter, we get a lot of it on the 15 for those people that like to scalp or do intraday, right? You're going to hold it for how long? Well, if you would have traded right there, right, you would have held it, boom. Might have been almost a day, or again, as many as I said it would, but would it be worth the pips? Absolutely, right? 80 pips for the day. That's awesome. That's a killer day. So that's a little bit of a secret behind the strategy, is where we enter is through there. Now, once I enter, what I usually look for is based off the divergence, the market almost always does 3 waves. Okay, so after the divergence, I look for a three-wave pattern for where it drops, right? How it moves, to know when to get out. Once you get those 3 waves, that's usually the safest place to get out. And sometimes, not always, but sometimes the market doesn't follow the way that we're hoping with waves. So that's why, again, I still follow the wave pattern, that when I see it go down, if it starts correcting itself, we'll already have a break-even stop loss if we see it's moving or retracing too much for us to be happy. And for us to be happy, by the way, what people ask, what does that mean? For me, no retracement of a wave would be really more past the 50% line. So when I'm going up here and bringing this down here, it never should go back past that 50% line if it's a wave, okay? So seeing here when it retraced, you know, just to the 38.2, and obviously waves usually retrace to certain Fibonacci's. Anything within this area here, the 50% below, is my is my A-OK basically marker where I will be holding it still. Okay, so as you see for this trade, we sold it, dropped, we move our stop loss to break even immediately because you never want to lose money on the right direction, or again, lose money on getting the proper wave. If it was just one, for some reason, wave down and spike back up, right? No harm, no foul. But this way, as you see, it retraced back to here. We knew to held it and keep on going. If we saw it push back here, we might have closed our profits early. If it pushed, you know, up to here, we would have closed our profits early and just taken at least a 1-to-1 risk-reward ratio instead of a 3 or 4-to-1. So at least we got some profits for the day, and look for a more smooth setup because the market will do crazy things. You can never 100% guarantee the market. You can just react to it, which is why we build the strategy around reacting to it the right way. So as you can see, it worked as a perfect trade with that. So for me, managing or starting, I don't usually look at Fibonacci's too much to enter trade because I prefer doing it on straight supply and demand or flat M's is my favorite way to do it, or channels. But when I enter a trade and once I'm entered, Fibonacci's are crucial to know, are we going in the right direction? Is this an actual wave, right? Do we actually want to follow this? Is it going to be an actual wave down and then continue furthermore, right? So I double check for that. And then of course, to exit a trade, I usually wait for some kind of consolidation, or as soon as it's down to the third pump. Honestly, in my mind, I always see a wick or consolidation, just like I told you, happens in either direction, and that's what we'll call fractal. I'll teach you a little bit about that at the end to understand it and grasp it more. But basically, after the third wave is usually where I'll exit my trade. If it doesn't hit my take profit, or if it does, that's not my point, because again, we are not going to expect the market to follow exactly where we want. It's about grabbing the profits it gives us. So, you know, I might have had my take profit all the way down here, right? I might have kept it all the way down here. But when it pushed down, I look at the past fractals, and basically wherever the last fractal was, I'm going to base it off of that. Now, what is a fractal? Some people ask. The easy way is everything moves like we know in crazy jolts, right? Jolt, jolts, 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 everywhere. The tip points of everything is a fractal. The tip point of everything. So the market always moves in fractals. If you can look in here, just how I have the markets, you can see where the fractals are just off here, right? Like up here, right? There's one there, there's one here, there's one here, one here, there's one here, here. Every point the market basically makes a turn, right? There's 3 fractals there, right? All very close together, right? So when I start seeing it match a fractal or get close to it, like here does with this, we know that's going to be basically the furthest is going to go down, then it's going to probably retrace to one of those fractals up there, because they all follow also Fibonacci. And look what it did. It even retraced to that fractal. And it's bouncing back and forth, and as you can see, consolidating at the same time. So the market's fractals are super important. I love to enter when I see a fractal and the market's flat. It's not good to enter because the market will always fractal in a certain direction before going the opposite direction even. Okay, but it always tries to fractal in some way, shape, or form. So I look for those. And when I see those fractals, that's I'm like, okay, good to enter, good to exit. Fractals will tell you when a wave is going to start, as you can see here. Fractals happen all the time with that. So you need to keep in mind that with trading, it's not just about entering and walking away. I always keep small tabs, not micromanage, but keep tabs and monitor it to see where fractals are, to know, hey, you know, if you're happy, let's say if you're doing a high-risk trade, right? You were putting like 10 or 20% on a trade and you entered here, stop loss up here, and your profit hit right here, you could hold it for further, but maybe you'd say, I'm going to take out because you know the fractal is coming. You see the wick starting, you're like, okay, it's going to retrace. I'm going to pull out before this fractal so I can guarantee my profits and then re-enter if I need to, right? That is the important part to my success and our success with this strategy is understanding when to get out and when to get in properly, and the fractals help us with our strategy. I don't use a fractal indicator that people use. I just understand the concept that the market just moves in that, jaggedy way that you need to also realize, it's not going to be a smooth sail all the way down. It's not going to do nice smooth waves. It's going to be very jaggedy and spiky, and you got to keep aware of that, right? So that's what I do. So right here, once I get that execution and going, I don't so much pay attention to the RSI once I'm in the markets. I will pay attention sometimes to the stochastic, specifically on the hourly, okay? So as you can see, the stochastic will give you very good indicators of when it's going to be doing another big wave in a direction, or the waves that I look for. So when it gets to the bottom, that's usually, again, another sign to start looking to get out. You could on the 15-minute chart, right? But with this, where we had the divergence here, I knew that it's basically just all wonky, so I would only look at the hourly because it was already low before we entered, right? So that gives you a sign, again, that it's going to break through this channel. But with this in mind, using the strategy, it can work for almost any pair. My favorite times to trade in the times I find the best is, again, just like anyone, are the main market opens, right? Tokyo session trading during that time of volatility, the New York and the London. I like to trade mainly Tuesday, Wednesday, Thursdays with this strategy, just because you see the fractals are more, basically the fractals are more trustworthy. They're not just scrambling to find a starting point, which they sometimes do at the start and the end of the week. Sometimes at the start of the end of the week, markets will still follow their structure, so it's still good to get in. But I much prefer to doing it with the Tuesday, Wednesdays, and Thursdays in mind when trading with it. So that's a basic one right here. I'll just show you again another pair. Let's just pull up another random one, right? Maybe USD CAD or something, right? Like that. We will remove all past drawing tools, and let's look here. Let's look here to see what we were expecting. Okay. So same thing here. We had the divergence going up and down, right? The divergence starting in what happened at the highest fractal, which was just a little bit near that M. It started going down, and that was where people would have banked, not a lot, but right. That's, again, another 30 pips right there. If you want me to show another one, that would be really good. Right here, you could see, again, going up, and over here on the RSI, as this one was going up, we can see it was kind of just staying stagnant, even kind of going down a bit. Perfect before the crash, right? And then we even had here again, divergence with this going up, and then a major crash. That's because, again, we also had the stochastic on the 15 right by our side up there. So you can see this really works. It's awesome. You can see the waves that follows 2, 3, right? It does 3 fractals basically per push. 1, 2, 3. Or you can call this, technically would be the first one. So, right, 1 fractal up, 2 fractal up, 3. So I look for that always within my trading to get the best trades. And that's how I really mark up, as I will mark up possibly 4, 5, 6, 7 pairs, but then trade the one that is truly ripened, as I like to call it, for trade to enter. And then the rest I will leave them as is, because they're not necessarily needed to trade at that point. So again, this strategy is very simple. Once you understand the fundamentals, it's more about mastering it and being able to see it with the eye. And that's just like any strategy in life. It's not going to be where you're going to pick it up and instantly make profits. Believe me, if it was, it wouldn't have taken me 2 years to master the strategy. Like I said, it is something that takes a while to get to it. But once you do, you will start seeing consistent profits, and you will have the same routine in the markets every time, which means no more guesswork. So this strategy, I hope it helped you out, and I'm going to share with you some more information next time on it. Make sure as well to stay tuned and look to jump into our live sessions. That's the best way to get into trading and strategy is to actually join people with live sessions so you can master it quicker. But I hope that this helped you understand the markets more and helped you understand how to become a profitable trader.